Hello and welcome to Trading Strategies Series Part 1. In this video, we'll be talking about an easy strategy that can allow you to make up to 2000 pips per month. But before we jump into the video, be sure to hit that subscribe button and that notification bell icon so that you will not miss any video that we will upload. If you have not yet watched our previous series, please do so, as it will definitely change your trading. In this series, we'll be giving you different strategies to make your trading life simple and profitable. The strategy is a swing which is called zone it and wait. It is actually a day where we have a break and retest on the daily time frame. It uses two time frames, which are the H1 and the daily time frame. It requires stocking the market only in the London and the New York session. And as I said in the previous videos, London session trading is done at 9:30 to 12 GMT plus 2. The New York session is done at 15:30 to 16:30 GMT plus 2. No indicators are needed, as it derives its high probability setups from pure price action. Before we go to the instructions, there are a few notes that we need to clarify. A demand zone is where all the big buyers are located, whereas a supply zone is where all the big sellers are located. An uptrend is seen by higher highs and higher lows, whereas a downtrend is seen by lower price highs and lower price lows. Illustration for demand and supply zones. This is a basic illustration of what we are trying to say. A supply zone is also equivalent to a resistant price point region, whereas a demand zone is also equivalent to a support price region. This is the basic structure of an uptrend, and the inverse is also a downtrend. An uptrend, as I said earlier, is actually seen by higher price highs and higher price lows. Before we go to the charts, we will have to make it clear that you will only put 200 pips to the take profit and 50 pips to the stop loss. This is where you will get the 2000 pips per month, because we assume that you will probably get at least 10 setups, good ones, within a month, where you will have 200 pips on each trade. Multiplied by those 10 setups, you will actually get the 2000 pips. We'll see how to trade this on Euro US, OD JPY, and OD US. Do not be afraid, it works on all pairs. The first thing to do is to go on the daily time frame. On the daily time frame, that is where you find the zones, and within those zones, those are the points where you will look for entries. First thing is to mark up all the demand zones that you see on the daily time frame. As I said earlier on, demand is actually equivalent to support. In this scenario, I've already marked this demand zone where the daily time frame seemed to reject the region. This was actually a demand zone. If that demand zone is broken, it will be converted into a supply zone. So in this scenario, this candlestick proved to break that demand zone, making this region now a supply zone in the future. And in the future, we actually saw a retest of that zone. Going forward, we had actually another demand zone, which is equivalent to a support. This demand zone region was broken by this candlestick and becoming a supply zone in the future. So Where this comes from, that this strategy is one of the simplest one, is to look for M's or W's depending on the trend on the H1 time frame. Let's go to the H1 time frame. This was a region which was a support or a demand zone. It was broken. After being broken, price came back to that demand zone to retest the region. And when it retested that region, that is where we will look for setups to enter the market. In this scenario, our only setups that we'll be looking for are M's and W's. Let's go to the H1 time frame. Right. This is the M. This is actually the region that we've drawn on the daily time frame. Going down to the H1 time frame, this is the exactly the setup that we are looking for. The first leg was actually within that region, and the second leg was actually within that region. This is the quality of setups that you should be looking for. After the second leg is presented, we wait for any candlestick reversal pattern to enter our market. In this scenario, we have this candlestick reversal pattern followed by the confirmation, and our entry was actually right below this candlestick. Having this one, our 50 pips take profit was probably around this region. Our take profit, our 200 pips take profit was going to be from this region up to this region. That is where our take profit was going to be. Therefore, our take profit was going to be hit at this on the same day at this point. 200 pips in our bag. Let's see on another chart. Pound against odd. The first step is to go to the daily time frame. After going to the daily time frame, we mark up all our demand zones or support zones. As we can see, this was our demand zone. There was a wick in this region, which was this region being broken here and then being retested at this point. Then this one, we also had a demand zone in this region, then being retested here. Then from there, we had another demand zone being a supply zone in the future here. So these are the points that we will be looking for entries. These ones are the points that we'll be looking for setups. We'll go at this point on H1 to see if a setup was presented. This is the point where price retested or where price came back to that previous demand zone, now being the supply zone. In this, we saw that there was a setup which is an M, and this was a bearish engulfing pattern, and our entry was going to be after completion of that pattern. Our stop loss was probably above or within this region, then our take profit was going to be from that point to this point on the third day after our entry. So I'm sure by now you can actually see that this is a very simple strategy that only requires you to be patient and disciplined. Do not rush these things. You just need to be patient, disciplined, wait for the price to reach the zones that you have put on the chart, and wait for pristine clear M's and W's on that chart. Let's see again on the Euro US. On the Euro US, we had our lowest point. From this lowest point, price came back. Actually, I was not interested because this was actually another point of entry. As you can see, this was a point of demand or a support zone where we retested on this region. Let's check out on H1 if there is a setup that could allow us to enter. There we are. We had this structure. Now, discipline comes into play. You have to ask yourself, that is this your defined M or your defined setup? But going on M15, you can actually see a multi-session M in this region. So you could take it or you could scratch it. But taking this trade after this bearish engulfing pattern was definitely going to give you a no drawdown trade and give you your 200 pips. Right. Back to our story. Let's remove this one. Right. As you can see, this was now our supply zone. This supply zone was going to change into a demand zone after price had broken that region. As you can see, within this region, price came back, and our point of interest is this one. This is the point where we are going to look for our setups. Let's check if there was any setups within that region. Right. This was the structure in that region. This is called an extended W setup. What do we mean by that? We mean that the first leg is actually shorter than the second leg. This was the first leg and this was the second leg. And within that, our point of entry was going to be after this candlestick pattern. And our stop loss was going to be 50 pips, which is around or below this region. So our 200 pips was going to be from there therefore we were going to swing for more days, meaning that our take profit was going to be at least touched after at least 1 to 1.5 weeks. So this is where patience comes into play. So basically, this is how you trade this strategy. It's as simple as wait for demand or supply zone break and retest. And during the retest time, it is the time of interest where you now look for M's or W's in that region. If you do that consistently, catching those pristine setups, and as I always say, do not confine yourself to pairs that are not presenting what you are looking for. Look for a range of pairs. Check for demand zones and supply zones on the daily time frame. wait for their retest, and on the H1 time frame, look for patterns or setups and then enter the market. This is actually a very simple strategy for those guys who do not know how to count levels or trades subjectively. This will come as a rescue package. In conclusion, since most online brokers provide a ton of trading instruments, do not confine to pairs that you hardly see the level flows. Look for pairs that are clear in their moves. Your accuracy will definitely increase impressively. So thank you for watching. Please share this video with someone. It will surely help them. Do not forget to check out our free signals Telegram channel. Here is the URL.